Namaste. My apologies, I can't join you all today at this fantastic gathering of maritime stakeholders, and I wish I could visit your beautiful country, but unfortunately, my schedule doesn't allow me to. My name's Gavin Allwright, and I'm the Secretary General of the International Windship Association, a collection of over 200 companies and leading stakeholders that are bringing wind propulsion back into commercial shipping. Um, Now, today, what I'd like to talk about is the ambitious goals that we've set ourselves as an industry, moving to 2030, 2040, finally a net zero goal around 2050, depending on national circumstances. Um, the last 2 weeks have been rather challenging at the International Maritime Organization, as I'm sure you're all aware. And unfortunately, we came away without a deal on a carbon price and on the pathway, if you like, towards that net zero target. However, what we're going to be facing is a huge push towards the innovation and the rollout of um, low emissions and zero emissions technologies and fuels, regardless of whether we have that regulatory drive, if you like, to push us forward. And indeed, wind propulsion itself has been moving forward without much of that regulatory pressure. And we really see this from a perspective of not just wind propulsion, but three critical areas. So the rollout of energy efficiency across the fleet on a real integrated level, voyage optimization, and then integrating both of those with wind. Each of those segments can easily deliver 20% plus into the equation. So from energy efficiency measures, 20% plus, if we consider that still two-thirds of the fleet, of the world fleet, haven't installed some form of energy efficiency measure on board. Voyage optimization projects like the Blue Visby project, etc., can really deliver very, very substantial savings. But then wind propulsion actually delivers the energy. And what level of energy can we be delivering? Well, from a retrofit perspective, 5 to 20%, optimized up to 30% of the propulsive energy requirement for the vessel. And if we're looking at optimized new builds, then 50% plus. We have a number of ships recently launched that are looking at 60, 70, 80% delivered from the wind on particular routes, of course. Now, if we combine those, then we've got a very substantial 60% plus element within the energy provision for shipping. And when we're looking at wind propulsion, we also need to consider that this is a zero emissions, pure zero emissions energy source. So there's no mining, refining, transporting, bunkering, or storage on board of this energy source. It is delivered to the point of use at zero emissions for the lifetime of the vessel, and maybe more, even more importantly, at zero cost as well. Of course, the technologies to harvest these are not zero cost, but the energy source itself is. So it will always have a return on investment. It will always be cheaper than any other option, but it's also compatible with any other fuel source or energy source that you decide to use. Now, where are we with that, with the fleet of wind propulsion ships? Well, with large vessels, we're approaching the 100 ship mark, about 5 million deadweight tons. So still quite small, but doubling every 12 months currently. Now, of course, with regulatory impetus, then that would scale much, much quicker. But this is a sector that is scaling, and it's scaling quite quickly in the sense that it's approaching an inflection point around 2026, where we have probably around 200 ships at the end of the year that has 3 to 5 reference points in each of the segments of shipping. So really giving ship owners that clarity and that confidence for having data and experience in each of those segments. And production is also scaling quite quickly. And this is a pathway that we've seen with solar panels, we've seen with offshore wind. Production has to go in front of the installations. We're seeing over 500 units of capacity, potentially up to 1,000 units of capacity already, some of that in China, some of that in Europe currently. But that's expanding quite quickly. And it is reasonably easy to expand that capacity because we're talking about a technology grouping or segment that's very similar to offshore wind or wind turbines. So if you have that capacity, that engineering capacity to develop those types of technologies, then you've got the production capacity with some fine tuning to produce these systems. Now, where are we going with this? Well, it's wind propulsion is a good example of a quickly expanding area. The EU estimated by 2030 we would have around 10,700 or up to 10,700 vessels with some form of wind propulsion on board. We think that's probably delayed by about 18 months due to COVID and the logistics issues just after that. But it's a substantial amount, 10 to 15% of the fleet today. And if we're doubling that scaling, we'll probably hit that kind of number around about 2031, 2032. The Clean Maritime Plan from the UK actually estimated this out to 2050 and looked at between 40 to 40%, 45% of the world fleet would have wind propulsion on board. We think that's conservative, but still a very substantial number and a substantial market, if you like. Now, another key point with the wind propulsion developments is it's also leading the way in the just and equitable transition area. From a just point of view, these systems are relatively easy for seafarers to train on. Obviously, there is some familiarization, emergency procedures, etc. But if you're able to operate cranes on board the vessel, so if the vessel is geared, then your seafarers would be able to quickly adapt to having a wind propulsion system on board as well. From the equitable transition aspect and the global south, it's really important that wind is available globally at zero cost. And it's globally available today and will be for the future. So from a robust and equitable energy source that is sustainable throughout the lifetime of vessels, wind is obviously a significant player there. And we already have a number of primary vessels and other vessels operating in small island developing state regions and least developed country regions as well. And we expect to see that grow. So on a final point, as we grapple with the challenge that we've set for shipping, combining and integrating that energy efficiency, voyage optimization, wind propulsion, and some other technologies such as digitalization, maybe electrification of vessels, etc. Training our crew better to use the technologies and the ships that are already in operation. These are the low-hanging fruit that effectively pay for themselves while we to extend that carbon budget, so we have time to build out that infrastructure for the alternative low emissions fuels. So in our parlance, we like to call that a win-win-wind situation. Thank you very much.
Good morning, everyone. We have about 35 minutes with 3 fantastic speakers. We are missing our 4th speaker from Papua New Guinea, who unfortunately had an emergency and couldn't make it. The format we'll follow is like the previous one, 2 rounds of questions and then open it up to the audience. Without much ado, let me get to our My first question, Maximilian Held, this is a question for you. As we've heard this morning and previously, there is an inherent tension between, if I could put it, sustainability and viability, financial viability. Your organization is working on market-based solutions to answer this conundrum and to look at feasible, viable mechanisms to get to decarbonization and green hydrogen pathways. Could you tell us if this is a mirage or if it's really possible?
It's really a pleasure to have the opportunity to speak about the work that we are doing and maritime decarbonization in general. If we look at the situation today, we are facing fundamental market failures in scaling clean shipping fuels. And those are foremost that we don't see the off-takers of clean fuels signing long-term offtake contracts that, however, would be needed for project developers to get their projects to final investment decision. And that is exactly where we come in with the so-called H2 Global mechanism, a financing instrument that we have developed within the H2 Global Foundation in order to break those two fundamental market failures between production and offtake. What we do is we insert a market intermediary between the production and the offtake side. So that market intermediary signs long-term offtake contracts with the project developers so that they can get to final investment decision. And then we sell off the product to the off-takers at short-term contracts. So we manage the price risk from the off-takers and they can remain flexible as the market develops. We do that with an auction on both sides. So a supply-side auction to filter out the best-in-class project they can produce at the cheapest price, and an offtake auction to filter out the highest willingness to pay in the market. Then you can imagine that there is still a price gap between the two, and that price gap is then covered through public capital. In addition to the double auction system, we publish the price points on both sides. So you can imagine on the offtake side, we host an offtake auction year after year. So every year you will have an additional price point coming into the market that will be published. And hopefully that will yield market creation and price discovery, price transparency in the long run. So in a nutshell, what the three advantages of this mechanism are: we provide long-term revenue certainty to the producers so that they can get their projects to FID. We provide price transparency to the market and cover the price risk from off-takers. And thirdly, we ensure that the public capital to stimulate, to catalyze those markets is really used in the most efficient way, because we activate both sides of the market, and only really the cost differential that is absolutely still there in the market in the early days will be covered through public capital. To date, there are 4 governments around the world, Germany, the Netherlands, Australia, and Canada, that have collectively committed or earmarked $6 billion to that mechanism. And we are expanding that portfolio and are working heavily on bringing that to individual sectors, and starting with the shipping sector. A first pilot auction that we have already conducted yielded a winning project called Fertiglobe. That's an ammonia production project in Egypt that will produce ammonia and will then ship it to Europe. So it's made possible through the work of the H2 Global mechanism, through this financing mechanism that can not only support green ammonia, but also green methanol, hydrogen in general, any type of product where that market failure exists.
Thank you. My next question is to Siv Remy Vangen, Chief Executive Officer of Norwegian Electric Systems. Here, after the One Ocean Week in Seattle, I think she's come almost directly. She was home to change bags, I think. Your company works on efficiency and environmentally friendly propulsion systems, not so much on new energy, but on making current available sources of energy that much more efficient and viable. Tell us something about your work and if that makes more sense for more and more countries, particularly of the Global South.
Well, I mean, as you mentioned, we are a maritime supplier working with owners and designer, looking at how we can make the vessel as energy efficient and smart as possible. We've been in the business since the early 2000s after we saw the introduction of diesel electric propulsion. And along the technology, we have evolved and we have developed. And back in 2015, the Norwegian Road Administration put out a tender for zero-emission ferries in Norway. And this was the introduction of the first ever battery ferry in Norway called the Ampere. Since then, the technology has developed, and I think we have more than 100 zero-emission ferries with a subsequent charging station along the coastline of Norway. There has been a tremendous development, not only in zero-emission, but also in hybridification. And this is something that our company is working very much with and seeing that this is actually working. Today, it's not only in ferries that we see zero-emission technology being in operation, but it's also taking step into the offshore segment. Earlier this year, there was an offshore operator called Bibi who did a contract in Spain where he was going to have a vessel with 25 megawatt battery capacity. This vessel can then sail out to the offshore windmills where they also can charge the vessel directly. And it's also a dual fuel engine, meaning that when the new energy sources are coming into play, they can sail fully emission free. So in Norway, there has been a huge transformation, I would say, primarily driven by public procurement. Because we see that when our industry have predictability and consistency, we can also invest in the technology and we can move it forward. So it's not only applicable for short sea shipping, but we can also transform it into other segments. And right currently now, we have actually a project at Cochin Shipyard with the Norwegian ship owner, which is very interesting. It will not be zero emission, but it is a cargo vessel. It's 8 cargo vessels that will operate in North Europe, and they can have battery capacity. They can charge at the port side, and it's also dual fuel engines. So when new energy sources are coming into market, this vessel is ready to sail emission free. And that is what our company is all about. And I think that is our contribution to the global south, but also to other countries. As you said, I was just in Seattle. The US is also a country of enormous opportunities, especially on the coastline. It's very similar to the Norwegian coastline. They also have very small islands that are connected with the cities. And they see a tremendous renewal need for their ferry sector. So they are very interested in learning how we are doing it. And I think that is our responsibility to share our knowledge, to share how we have done it, so that our lessons learned and also our failures will not be yours to make, but actually something that you can benefit from.
Yes, the Norwegian coastline and the US coastline share a lot, but Norwegian salmon is better. Michael Schroeder, Desertec and the Desertec Foundation has been a pathfinder in renewable energy in solar and wind in the desert regions of the Middle East or West Asia and North Africa, even the Gobi Desert, as I found out, the Mediterranean region. How do you bring these experiences, innovations, and successes to the maritime domain, which is far removed from deserts?
Thank you very much for having me or giving the opportunity to speak to this great audience. As well, also, we really appreciate how professional the Congress has been organized so far. Yes, I'm a member of the board of Desertec Foundation. We are active the last 15 years in North Africa, in the MENA region. What we are doing is we are supporting project developers all over the globe and initiating renewable energy focus on the renewable energy sector, but only not limited to that. We are looking for innovative solutions in general. Right now, what we are trying to focus, especially with the background that we are from Germany, based in Germany, is that there's a lack of electricity and the demand is much higher as a supply due to the fact that the German government has shut down the nuclear power. So we are looking for alternative solutions, meaning how to transform electricity in the desert regions into hydrogen and finding a solution how to transport it to Europe. The problem is there's a lack of infrastructure solutions that it's not possible so far to transport the hydrogen. As Max mentioned, to transport hydrogen, you need to transform it into ammonia, but it's a very expensive topic, so to say. So that's the reason we are trying to work on infrastructures. The last 10 years, we achieved that there's an interconnector from North Africa, from Tunisia, has been built and implemented in Italy so that we can connect the electricity from Africa to the European Union. The problem right now is that in Tunisia, the electricity price is less than 2 cents per kilowatt hour, meaning it's very difficult to implement a project there. That's the reason we're going to go more south, also to Namibia, supporting the project developer there, and are in general very open to make also here in the region alternative solutions, how we can implement any kind of projects. So as I said, I'm not just focused on electricity or photovoltaic production. What we're doing right now as well is transformation from waste to hydrogen. I think it's very interesting also for the maritime region here, because you can just transform wastewater into hydrogen and transport it, subject to getting a fair price. That's also very interesting and important to collaborate with HG Global, because it's also a regulated issue that if you have waste to hydrogen, that it could be named as green hydrogen. It is very important to have sustainable offtake contracts or offtake agreements with usually government entities or from the private sector. But in the European Union, we have it's a condition that the institutional investors or the utilities can only buy or sign offtake agreements if it's green hydrogen. So it's as a kind of regulated challenge, and we're working on that. So given the fact that I'm also leading the German business delegation with 20 entrepreneurs from all over the sectors here for the last 3 days and another 3 days ongoing, we're representing almost 7,000 entrepreneurs from Germany, all over the sectors, from the textile, from the energy sector, from the automotive sector, and are very looking forward to get in potential collaborations, all of the sectors, not only just limited to the hydrogen, but it's very important to get us another energy source. But also working on the logistic, what is for me the biggest challenge to say how to transport the hydrogen or the ammonia from A to B. And that it's still, because the logistic costs also increasing all the time. So we are looking to find the best solutions. That's the reason why we focused so far in the MENA region. But India and the MENA region is very close connected. So it could also be like a collaboration between the governments there and the technologies from our side that support.
Thank you, Max. Maximilian, if I could go back to you for a second question. If you look at a related but different field, such as climate finance, we've often come across this conundrum where, or this paradox, where finance is available, but it's just not getting to the countries where it's needed the most. How do we find a workaround, or are we in the process of finding a workaround for, sustainable sailing or in the maritime domain? How do we prevent that in the maritime domain? Because in the case of climate change in a faraway country, it doesn't really affect me, but in the case of unsustainable maritime practices, it affects everyone.
Absolutely. First of all, I think we should also consider this as a huge market opportunity. If we look at the global production of clean fuels or also battery electric hybrid chips, this is a real market opportunity to be a pioneer in this transition. I already explained how the HD Global mechanism really acts as a green market maker internationally, globally. And what is quite clear to us is that right now, I mentioned that 4 governments around the world have committed or earmarked $6 billion to support the scale up of hydrogen and hydrogen derivatives in the way of the financing mechanism that we provide. However, you can also imagine that there are different funding sources available, like, for example, climate finance, like international financial institutions, to support such a mechanism as well. The interesting bit about the H2 Global mechanism is that it's super flexible. You can tailor it to the specific needs of the fund providers. You can do this for all different types of products, so for hydrogen, ammonia, methanol, etc. You can also tailor it to the geographies that you want. So you can imagine that, for example, the supply side auction would be open only to one country or a group of countries. And the demand side auction is open to, again, one country or a group of countries or even globally. So that opens up a whole spectrum of possibilities, because you can also support a just and equitable transition, because climate finance could flow into fuel production projects in the global south, and then offtake would be from global offtakers, for example. And I think that is quite important to mention, because what we see more and more of these days is an interest to bilateral funding windows. So for example, a country A providing a certain amount of funds for that financing mechanism, and country B providing an equal amount of funds. And then the production would happen in country A and the offtake in country B. So we also foster international trade patterns, and that can also yield progress around the world and ensure that also projects in the global south, you already mentioned Namibia, for example, could be relevant. I think India, since we are here in India, is a super interesting place to produce those clean shipping fuels in the future. We have seen that already from the latest SECI results, that green ammonia can be produced at a very, very low cost. And I think there is quite a big hunger, at least from the European Union, to also get access to some of that fuel. And it's a big export opportunity for India. And I could go on with many other countries as further examples, but I hope there was a point or there was an argument why we feel that it's really a global discussion. It's an international discussion. It's a big market opportunity. And we're working together with some of those international financial institutions in order to make that work.
Thank you. Michael, if I could come to you and focus on one of the areas of commitment and work that Desertec has focused on, which is green hydrogen and its application in the maritime domain. In a sense, scalable green hydrogen seems to be like tabletop fusion, tantalizingly close, possible, but not quite there. Are we chasing a mirage, or is scalable green hydrogen, especially in the maritime domain, possible in our age?
I think it's very easy to produce the green hydrogen to a fair price. It's all subject to new technology that has to be implemented. And especially in that region you mentioned, in the MENA region, there's enough space. Could easily on the desert implement CSP, concentrated solar power plant, or the photovoltaic plant combined with the wind power plants, or maybe also including storage. But it's still sometimes it's expensive. So then it's always challenging if it makes sense to realize these projects. But in the region, it's only working in the region. It's not working, I would say, in the European Union, only in Spain. It's working. And then it's always the key question, how you transform it, and as I mentioned before, the transport cost and how to transport hydrogen. That's the major challenge here, and to transform it even more to ammonia. You could transport it, but at the end in Germany we are looking, or in Europe we are looking for electricity, not for the hydrogen as a fuel. Of course, it could be transformed even also into airplanes, like green kerosene. But this is are not working in Germany because DHL, they are looking for project like that, or they're desperately looking for green kerosene. But we have not the possibility to transport it because infrastructure is not yet in place or not ready in place. That's the reason we are working on that. But we are thinking, especially that between MENA region and here in the Maritime region, it could easily be realized to transform into an economy that green hydrogen could be easily implemented here with the players that globally act in that field, like the off-takers on one side, but especially the innovative enterprises that we are working with on the whole globe. And it's everybody, every month or even from day to day, they come with new innovative ideas, how to make the best market share to provide green hydrogen. And this is what we are trying to implement. As Max mentioned, we are active on the globe. So we're looking for the best solutions from China to Latin America, where the best solutions are, like the German enterprises combined with the European entities like Enel from Italy. They implement a wind power plant in Chile just to see how it will react, or how does it works from transformation to hydrogen to transform into e-fuel. But then they learned it's the transport by boat, it's very expensive. So with the diesel, so it's desperately needed to find a solution that makes sense, that the transport is not more expensive as the production is.
Thank you. My final question is to Siv, and after which we'll open it up to questions from the audience. So please have your questions ready and then come back for closing remarks. Siv, when you look at this entire dynamic between making available sources of energy more efficient and investing in new sources of energy which will emerge in the future but are some time away, when you consider companies you work with in countries such as India or clients in other parts of the world, is it really, given today's geopolitical and economic realities, given competing interest, given competing commitments, is it really surprising that companies and countries such as India are leaning towards efficiency rather than new sources?
Thank you for that question. Well, I mean, touching upon what Michael said as well, that it is expensive and it's difficult and that you need volume and you need the infrastructure. I completely agree with you on that. And again, going back to Norway and the public procurement process, we have actually 2 ferry projects in Norway where the ferries are going to be operating on hydrogen. But we don't have the hydrogen available in Norway, not yet at least. So in the south of Norway, there is one ferry called the Hydra, which was delivered last year. She's actually importing her hydrogen from Germany with trucks every day. How environmentally friendly is that, right? And how expensive is that? So we need to have a much broader, or we need to invest in the infrastructure of the production. So it's closer to the need and the use, etc. But, you know, having said that, for us, I don't think that the maritime transition is all about one fuel or another. I would say it's about the combination of a lot of things. And I think also Gavin touched upon it a little bit in his speech. You know, wind is one source of energy. And we are seeing that wind and the wind sails are now being invested in for the new buildings, but also the retrofits. And at Norwegian Electric System, we actually have 3 projects with the rotor sail. And we are seeing that the vessel are saving or operating at a 20% higher efficiency rate. So that's one way of thinking about how are we going to reduce our emission. Short charging being in port is one way of doing it. Heat recovery system is one way of doing it. Using technology in terms of operational efficiency, but maybe also collecting ocean data to have smart ship routing is another way of doing it. And we have one owner in Norway, in Bergen. It's a big owner, Deep Sea Shipping. And compared to their 2008 numbers, they have actually succeeded in reducing their emission with 50%. And this is all through energy efficient measurement. So I think until we have new fuels available, ammonia, hydrogen, or green methanol, we need to do what we can today with the technology that is available, with the knowledge and the experience that we have, and with the vessel that we have. And just scale the technology as much as we can so the capital expenses are going down, and then the the financial sustainability will come by itself.
Absolutely. The need for the ideal solution, the reality of what is available and
Absolutely.
what's possible.
Yeah.
Ladies and gentlemen, now we are open to questions from the audience. I think there would be mics that the organizers would have available. If you could identify yourself and ask a sharp question.
Good afternoon, gentlemen and lady. My name is Krisha Sharma. I'm a final year cadet at Training Ship Chanakya here in Bombay. The moderator, sir, you mentioned about how the green energy, especially hydrogen, will it be feasible in our lifetime? Now we are taught, according to the most recent regulations pertaining to maritime pollution or preventing it, that shipping as an industry should reach carbon net zero by 2047. Now, all of the panelists mentioned the feasibility of using hydrogen from ammonia and other green fuels. But sir, is it possible or economically feasible? In the end, shipping is all about profit and losses, taking into consideration all the pollution risk and everything. But is it a feasible option to reach by 2047? Is it a possible target, or should it be extended so that it's actually viable? Thank you.
My name is Mitesh Sudhar. I'm from an MBA student from Atlas Skilltech University. So my question is that when we talk about the alternate sources of energy, as what Sir Michael said, that from desert, the energy transferred in the form of hydrogen, green hydrogen converting into ammonia and then transport into Europe. And also we are seeing in maritime how the temperature difference, what we call a thermal energy, what India is doing currently in Lakshadweep and Andaman, by temperature difference, we are getting the energy. So I want to ask that which is more expensive and require a lot of infrastructure when we take both in comparison? Thank you.
One was a question for Michael specifically. The other, which I would like both Maximilian and Siv to answer, is broadening the question a bit. Policymakers set deadlines, noble deadlines. Are businesses up to the challenge of meeting those deadlines while still running sustainable businesses? So maybe we'll start with you, Michael, for that one question which you were asked, and then move to Siv. And
I'm not sure if I find the right answer for that, but assuming their own consumption going to be here in the region, I think the easiest way to produce is, of course, a combination of wind and photovoltaic that's going to be transformed into, due to the electrolyzer, into green hydrogen. So this is, for me, for now, the cheapest option. Maybe somebody can add anything to that, but to producing without taking consideration the transport has to be calculated independent of profit or loss. It's just like, can you fulfill the demand of e-fuel or green hydrogen given without taking consideration the logistic cost and the transport cost? I think photovoltaic combined with wind, potentially with battery energy storage system, could be the best way to use it or to put it into the market. Or as I mentioned at the beginning, it's very early stage, but I think especially also for the maritime region, it's the waste to hydrogen, transform from waste, from sludge, could be used 100%, the transformation. So it's 100% green hydrogen. And I think here in India, there's more than enough waste available that could be used. It's from plastic, it's from wastewater. And this is, I think, the easiest way to produce more than enough green hydrogen. But it's not yet everywhere available. But we are working on that. Very innovative enterprises from Germany and United States that subject to the support of the government, that has to be granted because it's necessary, because it's always the municipality. They are managing usually the waste. That could be at least, I would say, for a fair price solution that is also interesting for the institutional investors and for the regulators. So I think that's the best way to get the cheapest solution on green hydrogen for the maritime region.
Thank you. Siv and Maximilian, quick responses on policymaker deadlines and business bottom lines, as it were.
Okay, so thank you for the question. It's a very big question, I must say. And while I am optimistic, I think that after the last session at IMO, I'm also realistic. Having said that, there are many ship owners across the globe who are stepping up and taking their responsibility and investing in future-ready technologies and dual fuel engines, preparing their vessels for what is and what will come. Because the investment that they do today will actually be sailing for the next 30 years. So, they have to invest in the right technology. But for us to reach the goals by 2047, I would say that we need, to a much larger extent, consistency in the regulations. We need much more creativity in the financing. And obviously, we need collaboration across the borders. And the previous panelist, she said it's all about partnership and bilateral cooperation, sharing experience, and, I think that is something that would speed up the progress.
Max?
I think I would love to answer that question with a bigger picture in terms of whether climate change mitigation is a necessity or just a nice to have. And I think it's very clear that from a global commercial perspective, it's a necessity. Yes. There is a great analysis, I think it's from S&P Global, where they assessed how much assets are at risk due to the impact of climate change, and it's trillions. So first of all, I think we need to acknowledge that we need to see this transition. In terms of the timing, it comes down to the commercial viability of individual technologies. There is great analysis from so many organizations like RMI, like the University College London, etc., that have assessed that probably a mix of green ammonia and methanol for the deep ocean going shipping will be the most cost competitive route. And I'm explicitly talking about the deep ocean going shipping, because we know that for shorter routes, we should and are already looking at battery electric ships as well. Now, if we then look at the cost difference between very low sulfur fuel oil and green ammonia, for example, on the fuel, it might be significant. However, if you translate it to the end product, to the T-shirt that is being delivered through a container ship, for the laptop that might be produced in one country and then shipped to another one, for many of those products, we see that the incremental cost of transporting the good with green fuels is less than 1% or 2%. So it's not a lot. Does that mean that this transition is easy? No, absolutely not, because it still has a material impact on businesses. And therefore, I think it's very important to look at what the IMO will do now in a year's time, because I think it's a unique opportunity to get a global framework that creates a level playing field. And once it's a level playing field, then there is regulatory certainty for fuel producers, for shipping companies, etc. Right now, we are in this situation where we have this chicken and egg problem. Producers need those long-term offtake contracts, but they don't get it. That means that the projects are not being built. That means that learning curves for the technology are not realized. So we don't see that cost down potential. Markets are not being created. And we need to break that vicious circle. And through innovative financing instruments, through initial catalytic support from governments, international financial institutions, from the IMO, I think this can be this vicious circle can be broken and can be translated into a positive circle. So that projects are built, the technology matures, the cost becomes lower, makes the whole transition even more commercially viable.
Thank you. We are down to the last few minutes. Two questions there. Sharp questions, sir, please. Quick and sharp.
Right. Thank you for the insightful discussion that we've been having. My name is Anirudh Agrawal from AVN Associates Chartered Accountants. So my question, part of the question has already been answered, but to be very specific, IMO recently has issued a carbon credit tax to be issued on the shipping company, right, from 2028. So my question was that while I understand that there is a carbon and stick approach, a carrot and stick approach which is required, but with the CBAM coming into the picture and the CSDDD, with the carbon tax, and also, as you mentioned, that there is lack of funds and lack of innovation in this sector to that certain extent.
Got it.
What is your opinion in that sense?
Carbon tax, and if I could request my panelists to, in a minute, answer that question as well as give their closing remarks. So let's start with you, Siv.
I mean, carbon tax can absolutely be a tool to take out the deviation between traditional fuel and new fuels. But I think that we also need an instrument that when this tax goes into or is being paid, it has to go into some kind of pool so that the industry can actually get it back again, like a fund or whatever, because that means that they can apply and get funding for the new technology that is being invested into. And I think this is a large part of the discussion around carbon tax, because we're not able to find the right structure and how it is going to work and not work, etc. So it can be a tool, but it's a difficult one to agree upon or find a solution upon.
Okay.
Yeah.
Michael, your views?
Nothing to add on. Nothing to add on that. That's
okay. Nothing
perfectly
to add.
Explained.
So, Maximilian, you have the final word.
I think what we all are striving for in the maritime decarbonization is that we don't base all of this on subsidies, for example. I think we want to create liquid, subsidy-free markets. And I think we have seen lots of analysis of the technologies that we need and the mix of technologies that we need, the infrastructure assets that we need. And I think right now is the time to implement those because we have enough analysis. And therefore, I think any financing institution, any industry stakeholder, any NGO, etc., the whole full spectrum, wherever we can implement solutions now to get things rolling, will help us later on to also achieve the climate targets in the timeframes that are set by individual jurisdictions around the world.
That's an optimistic and wise note to end on. Thank you to my panelists for what has been a very enriching discussion. Thank you very much. I hand you over to the organizers.